The topic for today's discussion is credit, a part of the same lesson, money and credit, from your economics textbook. What is credit? It is an agreement made between two people on the basis of something. Now let's define that. Credit, it refers to an agreement in which the lender agrees to give money to the borrower in return for a promise of future payment. You understand? It is an agreement between the lender and the borrower. The lender gives money to the borrower, accepting the promise of the borrower that he will repay it in future. The lender also reminds him that an interest rate will be added on to what he has to pay. That is what is meant by credit. Loan, kadam. Credit refers to an agreement in which the lender agrees to pay money to whom? To the borrower. On what? In return for a promise of future payment. Understood? For which the borrower has to pay an interest too. That is what is meant by credit. It is an agreement in which the lender agrees to pay money to the borrower in return for a promise of future payment, for which he has to pay an interest too. That is called as credit or loan. Now, there are two types of credit situations. I or you or anybody takes loan. Understood? You have got credit. You have taken money from somebody, somewhere. That is credit. So, this results in two kinds of situations, or it will lead to two kinds of situations in people's life. The first situation is a person borrows money for his needs, say for production activities, with the promise to repay it back when he completes its production at the end of the year. Unfortunately, this person was able to complete his productional activities well, and he got a good amount as profit. And so he was able to repay back the loan amount correctly at the correct time back to the bank or from wherever he has taken. And this has made his position better. He is now in a better position. He has become richer in terms of money. He is able to live in a better way, have comforts for his own living, etc. etc. So, this credit has made his life better for him, his position better for him in terms of money. So, the credit for this man has played a positive role. That is one credit situation. The other one is, the second situation is, a person borrows a money promising to repay it back at the end of the year. Similarly, once the productional activities is completed. But unfortunately, if it's a farmer, the crop failed. If it was a small scale industry, the product did not have good demand, so he could not sell well. And hence what happened? He could not earn profit. He did not get anything back in return from what he had invested. So, he found it difficult, or he could not pay back the credit, the loan that he had taken. So, what happens? This person becomes worse off than before and is being pushed to a situation from which recovery is very difficult for him. And what is that situation? A debt trap. D-E-B-T, a debt trap. Understood? Kadakini, debt trap. So both the people, the first situation, the person A, the person B, both borrowed money, thinking that they will repay it back, they can repay it back at the end of the year. The first one, A, was able to do it and he felt happy and he was in a better position. B, all what he decided, all what he had dreamt of didn't work out. He lost and so he could not repay back. So he fell into a situation called debt trap. He was trapped in debt and he could not come out of it very quickly because he didn't have any backup of money with him. So he is now in a very bad position, finding it very difficult to recover from that. So these are the two credit situations. The next is the terms of credit. When, let it be a bank or a person or any organization that gives credit to anybody, the borrower has to satisfy certain terms. The bank or the money lender gives credit on an interest. The money with me, I am paying it to you for you to use. Understood? So just like the bank paying me an interest, I am asking you to pay me an extra amount for helping you with my money when you needed it. Understood? So an interest rate has to be paid. So an interest on the loan will be specified at the time when you are given the money or the credit, and that has to be paid back in future when you repay it with the principal amount. It doesn't end there. The next is, they can also demand a collateral, something of yours to be given to me as a security or guarantee for the money you have taken from me. It can be an asset of yours. It should be in your own name. It can be your house, it can be your vehicle or anything that you own. It should be or gold. It should be given to me and I keep it as a security deposit against the money that I have given you. When you repay it back, I will give you back your collateral. So why do me, the lender, ask for a collateral? Because I doubt if that person will be able to repay me back that money at the correct time. If he doesn't, I will lose my money. Why should I? So, to overcome that problem of my loss in money, what do? I will sell this collateral and recover the money. The owner lost, but I gained. I got back my money by selling his collateral. That is why the person who gives credit always demands a collateral. Third term of credit. So first term was interest, second was collateral, and the third is mode of payment. Mode of payment. How, when will I pay back the loan? How and when will I pay back the loan? That is mode of payment. Is it together at the end of the year or in installments at different times of the year, etc., etc. Or how much money will you pay in installments? All that has to be decided and agreed upon at the time of availing or taking your credit. So those are called as the terms of credit. The next is the sources of credit. The different sources of credit. There are two kinds of sources, the formal and the informal sources of credit. First, let's check what formal credit sector is. Formal credit sector is. Formal is the credit or the loans that you can get from banks or cooperative society. Banks or cooperative societies. Now, here what the problem is, the banks or the cooperative societies, being formal sources of credit, they will ask for documentation and collateral. documentation to identify myself that I am so and so with credible identity, and also a collateral which I can use or the bank can use to recover their money if you don't pay it back. So, what did you understand? Only those people who have good repaying capacity, who can give the bank or the lender something as collateral, will be considered by the banks to get these credits. So, the person who approaches a bank for credit should be one who is able to pay back the money at the correct time. Usually, will the poor people be able to do that? No, that is why they are coming asking for credit. So, usually this facility will be mostly used by the rich people of the urban areas. And remember, the banks will levy only a smaller rate of interest on the credits. So, they are at a comfortable position, at an advantageous position. Is it not? They are rich, they have money with them, still they don't want to use that money, they want to use the credit that can be got from the bank, and they will repay it in small quantity. So, their purpose is served, their money is with them, and they are able to repay back. Only a small interest they need to pay back. So, this helps the person or the people who have money with them. The formal sources of credit are friends of rural rich people. They are not helping because the poorer ones, they might not have a collateral, they might not have a documentation with them to provide, is it not? So, they cannot avail this, they may not be able to repay it back at the correct time. So, the banks will not help them. So, and the loans paid by banks. Before I said we have a bank, the Reserve Bank of India. It takes care of all what the activities done by the banks. All banks are under the Reserve Bank of India. All activities of the banks are being supervised by this big bank, the Reserve Bank of India. So, the loan activity of banks is being supervised by this RBI. How do they supervise and why do they do this? So, the RBI ensures that banks maintain a minimum cash balance from the deposits that they take from the depositors. And they also make sure or see that the banks give loan not only to the rich people or rich businessmen, but also to the correct needy ones, the small cultivators, the small borrowers who are really in need of money. There is uniform distribution of the money they give as credit. Also, the RBI checks the reports that are submitted by the banks on how they lent their money, on the loan activities done by the bank. Why do they do this? To make sure that malpractices are not done, to avoid malpractices. To avoid malpractices, what do? The RBI makes sure that they submit reports regularly about their lending activities. So, what happens? Whatever lending activity is done by any bank will be in the right way. It can be done only through proper channel, following the correct procedures. The next is the informal sources of credit. This will include the money lenders, your relatives and friends, your employer or any financial enterprise who is ready to give you cash on request as credit or loan. Those sources are called as informal sources of credit. So, this informal source of credit will help now the rural poor people. It will help the rural poor people. Why? Because they will approach the people whom they know to get money when they need as credit. So they are personally known. So without any collateral, without any documentation, they will be ready to pay them credit, believing that they will pay it back to them at the right time. So always informal sources of credit helps the rural poor people, the village people in the rural areas, the people who have not got enough money with them, nor do they have any documentation, correct documentation or collateral to provide for getting credits. And here in the informal source of credit, nobody supervises the lending activities done by them. Nobody supervises the lending activities done by the informal sources of creditors. So, and since it's easy, the poor people always depend more on the informal sources of credit. So, if they fail to repay back, if they fail to repay back the money at the right time, the loan at the right time, what happens? They will be fined. They will be penalized for that. How is that done? Their life becomes bitter. How does their life become bitter? The money lender will just walk in one fine morning and ask for what? Ask to give away the land he owns. If he's a small farmer, he might have a small piece of land in his name. That land he will take away. Or even if he doesn't have a loan, no problem. What will he do? He will just go ask the person to work for him as a bonded laborer. Whatever fine he has to pay, whatever punishment he is given, he has to take, because he is now at the mercy of this money lender or the person who has given him money as credit. So the poor people, they don't benefit out of the credit that they have taken from somebody. So now their purpose might have been served, but they did not gain much out of that, and hence they are unable to repay it back. So the second, the informal sources of credit usually pushes these kind of people into what? Into the debt trap. For them, borrowing becomes a big burden. It is a big responsibility. Why? It becomes a big burden, a headache, a tension for them. How will I pay it back? Will I be able to pay it back? But still I need the money to continue my life. So they will go for credit. So for the second type of credit situation, this leads to second type of credit situation, people falling into debt trap. So what will they do? They will hesitate to go for loans, and people will withdraw from starting small scale industries or improving their agriculture or building a better home for themselves. All that they will keep away. Why? Because of the fear and doubt that they will fall into a debt trap if they are unable to pay back the credit. So to help these kind of people, what should come up? Formal sectors of credit should improve. It should be encouraged forward, so that the poor people will also be benefiting from the cheaper loans. Why cheaper loans? Small rate of interest when they pay back to the banks, so that they may be able to give. It is the higher rate of interest that is levied on the loan amount that they find it difficult to repay. So formal sources of credit should be encouraged. And how will it help? If that is encouraged, these poor people, their living standards will be better. They will improve in all ways, in their living standards, in what they do, etc. etc. So cheap and affordable credit. So cheap and affordable credit is important. Cheap and affordable credit is important. It can be for the development of an individual, or also it can be for the development of the country on the whole. How will it help the country's development or an individual's development? When credit is used successfully, when credit is successfully used, what happens? It would lead to higher incomes for the individual. It would lead to higher incomes for the individual, and it will also enable people to invest more, and this will encourage increase in economic activities. So more people will start investing in agriculture or small scale industries or whatever they can do, and what will also be stopped? Debt trap will also be put to an end. So more people will be happy to go for borrowing. They will also try to get credit. So from that, who benefits? The banks benefit, Is it not? The banks will get more interest rate, their profit goes up, they can still roll that money out as credit and earn more and more profit later on. So, the same reasons can be given for what? Why is it necessary to improve and encourage formal credit facilities, especially in rural areas? Formal credit facilities in rural areas. Why? The same reasons can be given. Usually, the poor households of both the urban and the rural areas depend more on informal sectors of credit, and it is causing harm to them. We have already seen. So, how can this, how can cheap and affordable credit be made possible to them, made available to those who are in real need? For that, lending procedures can be simplified or have to be simplified. Why did I say lending procedures? It is that procedure which is a barrier for them from getting what? From getting loans. So, there should be equal distribution of formal credit funds so that the poor can also benefit. More bank branches are to be opened in the rural area. So, the people will approach the banks. It need not be the formal banks, it can be just the cooperative societies or the agricultural or the Grameen banks, which are able to provide them with low interest loans. That is also enough. It is not necessary that the Federal Bank or the SBI or the SBIT go to the villages and open branches. These banks are also there who has got all the power to provide loans. So, more bank branches are to be opened in rural areas to reduce what? To reduce dependence on informal sources of credit, which is very harmful for these kind of people who are in real need of money. Then, when they come for small amounts as loans, there should be documentation or asking for collateral can be ignored for small loan amounts, so that loans will be available quickly and the people will be, more number of people can make use of the credit facilities available at cheaper rates. So, now what did we understand from all this? That banks should play a better role in shaping the economic status of an individual, and hence need to improve that will help to improve the economic development of the country. So, when the economic conditions of people change, their share into the national income will also improve. So, it is in the hands of the banks, by providing credits to people, that economic development can improve for a country. If informal sources of credit are not easily available, something has to be done to make sure that these poor people in the villages are helped with money when they need, for all what they need. So, to provide monetary help to the poor, better ways, new ways have been found, and one such way is the self-help groups. One such measure is the self-help group, by organizing what? By organizing the rural poor, particularly the women in villages, by organizing the rural poor, particularly the women in the villages. They are very much happy and ready to get together, find ways how they can get money, because they are the ones who are always bothered about the financial situations of their homes, the needs of their families. So, they found something called self-help groups. They found something called self-help groups and encourage these women of the villages to come together and bring together their savings, to pool their savings. Usually, the self-help groups will have about 15 to 20 members. They will have about 15 to 20 members belonging to the same village. The members can take small loans from the savings that they have pooled together, and the best thing is that they are not asking any collateral. Why don't they ask any collateral? Because all these village women, they are known to each other. All these village women, they are known to each other. So, there is no need for a collateral. There is no need for a collateral. They can give loans. So, if they don't repay it on time, they can just walk into their home and ask for repayment. So they don't ask for collateral, which is a great relief for these women of the villages who wants real credit from the self-help groups. And also they charge only a very low interest. Why do they charge this interest first of all? So that anything that we get free has no value for them. So to make them have that fear in them that this has to be paid, otherwise something will go wrong. So for that, a small fee as interest is being charged on whatever is given as credit from the self-help groups and the savings they have pooled together. All decisions regarding the savings and the loan activities related to these groups are taken by the members themselves. A collective decision will be taken and the loan will be divided among whoever wants it, and what happens, and they will also make sure that it is well organized and they have better ways to get the money back. So the self-organizing capacity enables the group to become eligible for bank loans. The bank keeps a watch on what is happening within the village, within this group, and they understand that these women have a very good organizing capacity. They very correctly give out loans and very correctly make sure that the loan amount is got back. So this makes them eligible for bank loans. Since this is a very good method that is being adopted by these women, the banks forget about the collateral and provide bank loans to these people. They overlook the collateral procedures. So these groups, this facility helps the women to become more self-reliant. They become more economically better. They need not have to go after anybody. They use the credit, do something, earn profit, and they keep it for themselves and pull it again back into the self-help group. They and the others will be helped by that money. So they become financially better. They become financially self-reliant. So the regular meetings of these groups, also provide these women a place or a space, a platform to come together and discuss their problems too. They will have social issues, they will have harassment problems at home, education of children, or something or the other will be there. They will have their own problems, personal problems also to discuss. So that will be discussed among the members. Nobody else will know. So each of these members will have a similar experience. They will be able to help them out, giving them advices, and with which these women are also able to protect and fight for themselves. They become better and well off in the society. Now, so that is all about, or all the topics that is being discussed in the lesson. To sum up, what can we do? Let us sum up all what we discussed about this lesson, money and credit. Still, a majority of our population are marginal earners. So, credit facilities are important. To avoid a dependence of such people on informal credit sources, formal credit facilities have to increase. A poor credit policy can sustain development. What do you mean by sustaining development? Meaning it will slow down the process of economic growth. So, whatever credit policy the government takes should always be positive, so that it brings in positive results in economic growth of the country. Whether it be credit facilities, lately we heard, isn't it, our finance minister of the central government announcing certain packages mainly to improve the small farmers, marginal farmers. She especially use the word marginal farmers will be helped by providing economic packages through Grameen banks, etc., that you must have heard. So, a poor credit policy can sustain development. When loans are available, industries and business will improve. Their job opportunity provisions will increase, and they will be able to increase their share to the national income. So, the country's economic development depends on the development of all the three sectors: agriculture, secondary or industry and tertiary, on all the three sectors, which to on a certain extent depends on credit. Is it not? All the businessmen, they don't have this huge amounts of money to invest in certain industries. They take loans from banks. They should be able to repay back correctly. Then it will not affect them, otherwise it will affect them. So, the country's economic development depends on the development of the three sectors, which to a certain extent depends on credit. Understood? Any doubt? No. So, we'll wind up for today? Yes.